How $100 can become $1 million, the math explained. Turning $100 into $1 million sounds ridiculous. And if someone tells you they can do it fast, they're lying. But if you understand compounding, time, and consistency, the math behind it stops sounding crazy. It is possible, and at the end, I'll show you how you can make it much faster. Let me show you the system most people never learn. Before we go any further, let's be clear about something. This is not quick, this is not easy, and this is not financial advice. What I'm showing you is not a shortcut. It's a long-term system that works if you stay in it long enough. The $100 isn't special. It doesn't turn into a million by itself. What it does is start the habit, and habits matter more than amounts. For this example, we'll assume the $100 is invested in the stock market and earns an average long-term return of 10%. Now, 10% isn't guaranteed, and it won't happen every year, but we'll use it here to keep the math simple and easy to follow. There are many ways to invest money. You can invest by owning individual companies through stocks or by spreading risk across many companies using mutual funds and ETFs. You can lend money through bonds, invest in income-producing real estate using REITs, or put money into other assets like commodities or cryptocurrencies. In this video, the focus isn't on which investment you choose, it's on how compounding and time work once your money is invested. We'll break down each of these investment types and what they are in a separate video. Your income is what starts the process. In this example, $100 is invested every month. Over time, that consistency can grow into $1 million because of something called compounding. In the stock market, compounding simply means this: pay close attention. When your investments earn money, that money gets reinvested instead of being taken out. Those new dollars then earn money of their own. So you're not just earning returns on your original investment, you're earning returns on your returns. As this continues over time, growth accelerates. Like a snowball rolling downhill, it starts small, but it gets bigger and faster the longer it keeps moving. That's why time matters more than the starting amount. The longer your money stays invested, the more powerful compounding becomes. Before we look at the numbers and graphs, there's one concept worth understanding first, and that's dividends. A dividend is a portion of a company's profits that is paid out to shareholders, usually every 3 months. If you own shares of a company that pays dividends, you receive regular cash payments simply for being an owner. For example, some established companies like Coca-Cola pay a set amount per share each quarter. That means every share you own sends you a small cash payment regularly. Not all companies do this. Some businesses like Tesla or Amazon don't pay dividends at all. Instead, they reinvest their profits back into growing the company. Both approaches can make sense. That's why diversification matters. Owning a mix of dividend-paying investments and growth-focused companies can help balance income and long-term growth. So if you invest $100 every month and reinvest the dividends you receive along the way, how much faster does that move you toward $1 million? As always, doing your own research is essential. So with that in mind, let's look at how long it takes to reach $1 million by investing $100 a month. After 10 years of investing $100 a month at an average 10% return, the total value grows to around $19,000. You've contributed about $12,000, and the rest comes from compounding. Now fast forward to 20 years. At the same time, the investment grows to roughly $76,000, even though you've only contributed a little over $24,000. Here's where things start to change. After 40 years, that same $100 a month grows to about $632,000. Your total contribution over all that time is just $48,000. And finally, after 45 years of consistent investing at 10%, the value crosses $1 million. Over that entire period, you only contributed $54,000. This is why compounding matters. The growth starts slowly, then accelerates. The snowball gets bigger and it gets faster the longer you let it roll. This example makes one thing clear. Reaching $1 million takes time. Most people retire between the ages of 60 and 65. If this approach takes about 45 years, that means starting around age 20, to reach that goal by retirement. For someone who begins investing $100 a month at 20, this is completely achievable, but this is just one path. It doesn't have to be the only way to build financial independence. The larger point is this. By the time someone reaches retirement age, having $1 million would make a meaningful difference for almost anyone, a family member, a friend, even a stranger. And remember, in this example, the total amount invested over all those years was under $50,000. Doing something consistently over time is almost always better than doing nothing at all. Now, not everyone starts at age 20. So what if you're 30, 40, or even 50? The idea doesn't change. The amount does. If you start later, you simply invest more than $100 a month. That's how time gets replaced with contribution. There's a simple framework that helps guide how income can be used. It's often called the 70-20-10 rule, and we'll break it down in more detail in another video. For now, the idea is straightforward. 10% of your income goes to savings for emergencies. 20% goes toward investing. The remaining 70% covers living expenses. For example, if someone earns $4,000 a month, 10% is $400 set aside as savings. 20% is $800 invested. That leaves $2,800 for housing, bills, food, and transportation. Now notice the difference this makes. Investing $800 a month instead of $100 changes the timeline dramatically. After 10 years of investing $800 a month at a 10% return, the total grew to roughly $164,000, even though only $96,000 was invested. At $100 a month, the total after 10 years is about $19,000. Let that sit. After 20 years, $800 a month grows to over $600,000, and over longer periods, it can pass $1 million by a wide margin. After 40 years, that total sum becomes more than $5 million. Crazy, right? Not everyone can invest $800 every month, and that's okay. Real life isn't perfectly consistent. The point is simple. The more you invest, the less time it takes, even increasing your contribution when you can make a meaningful difference over time. And let's not forget about those dividends. Final line, by the time you reach retirement, you'll be glad you started, even if the amounts changed along the way.